Hi guys, welcome back to another market analysis video. So we'll be talking about Nifty, how Nifty has played in the past couple of days, how Nifty can play in this coming week, and I've also gotten like three stocks for you guys, three swing trade ideas, which I'm personally interested in, and if I get some good entries, I'll actually take these trades. So I want to share it with you guys, and let's see how it goes. So two of these stocks are from the pharma sector, and one is Asian Paints. So we'll get into those stocks in the second half of this video. Fine. So let's right now understand what Nifty is doing as a whole, what market is doing, which side is it going. So we need to get a good understanding of that to, which side we have to trade in. Correct. So if you've seen in my previous videos, 15,900 and 15,600 levels are the key levels that I've marked, and the market has been respecting it since quite a long time now. So this is since June 3rd till about 23rd July. That's almost 2 months, guys. So what is the market doing right now? We can see that it is in a sideways trend. So let me draw it over here and show it to you so that you guys can get a better picture. So you can see one, two, it's just going sideways, correct? And it's taking support, taking resistance, coming down, taking support, going up, taking resistance. So this is what is happening currently in the market. And let me remove these diagrams and show you in terms of candlestick patterns. The previous 2 days, the previous day, which was on Friday, we saw again a doji candle, high wave candle over here. High wave candle basically means the buyers are pushing the price up and the sellers are pushing the price down. So which side does the price want to go? We do not have a good idea right now. We cannot say, we cannot predict right now. Fine. But what we can say is, if the price crosses 15,900, if we get a good daily closing above 15,900, we can expect the price to move up. But hold on. If you see that there was a good closing, there was a good bullish candle which closed above 15,900, but immediately what happened? There was a good selling, there was a good sellers activity that's going on, and the price again came back and tested this 15,600 level. So this particular thing, this particular area, what has happened here, we call it a bear counter attack in trading. Fine. So that means the bears have tricked the bulls, saying that you can take the price up now, but they came in with full force at this particular price, and they again took the price down. So this is what happens in trading, and this is the whole reason why we say it is very, very important to keep a stop loss. Now imagine you went long over here, you bought Nifty futures over here and you went long, and you didn't place a stop loss. You would have been in a huge loss right now, right? You would have panicked, and you would have lost a lot of money because you didn't keep a stop loss. So always keep a stop loss. So if Nifty goes up, over here, if we get a good green candle closing over here, you can expect the market to go up, but don't ever trade without a stop loss. Fine. And the other scenario is Nifty going down again. So I'll take you to the lower time frame, 1 hour time frame, and I'll show you why I'm saying that Nifty can come down to 15,600 levels again. So let's see what the market has done previously in the past couple of weeks. You can see that once Nifty has broken this support trend line, it has come down, tested 15,600 levels. Now, is this only one time that has happened? No, it has happened so many times. So you can see this is the second time it has happened. If I can show you, there is a third time too over here. So yeah, see, the price went up, it tried breaking, took resistance, came down again to this 15,600 levels. So if Nifty again breaks this particular support trend line, we can expect Nifty to come down to 15,600 levels. But if Nifty closes above 15,900 levels, then we can expect Nifty to go up. But mind you guys, like I said previously earlier today, do not trade without a stop loss. Fine. So that is my view for Nifty right now. We can expect a good up move above 15,900, and if this trend line is broken, we are back to 15,600, and if this is broken again, we can expect some 15,400 levels in Nifty. So that was about Nifty. Now let's get into the stocks. So the first stock that I want to show you guys is Asian Paints. So let's see what Asian Paints is doing. Okay. Now Asian Paints is a very good stock in terms of long term. If you can see on a monthly time frame, it's a very good bull stock. So let me show you some zones over here that I'm particularly interested in. You can see this particular zone. It is a zone where the price has come and it has taken resistance, broke out, took support, went up, again came down and took support, and now again it has broken out, correct? It has gone up. Now before it broke out, there was another zone here. Look at this. Okay, so this is called a resistance zone. It's called a supply zone. Okay, now I'm going to mark this in red. Let me mark this in red here, just so that it becomes easier to identify. That's all. Okay, it doesn't really mean anything over here, but yeah. So you can see that this particular level, it has gone up, the price has gone up, it has broken this resistance zone. I mean, the sellers, there were a lot of sellers within this region, but the price has broken, it has defeated all those sellers and it has gone up. Now the price has come down. Now what do buyers think? The psychology of buyers is, when the price goes up and it comes and retests this particular resistance, the previous resistance zone, buyers are willing to accumulate over here. So what my understanding, what my trade logic would be, if the price consolidates, let me show you using this brush over here. Just a minute. Yeah. So if the price consolidates over here, fine. And if we get a good breakout, I would be willing to go long in this particular stock in Asian Paints, and my stop loss would be just below this zone. Okay, so my stop loss would be over here. I'll change this into red. So red depicts my stop loss. If the price goes up, my I would be willing to take a trade. Okay, so the how I'll be taking a trade, it's based on some strategies that I have. So if the price breaks out from this particular trend line, I'll be taking a trade, and my stop loss will be here, and my first target will be somewhere around this region, you know, where the sellers were active. So we can see that the price fell down from here, correct? So that's why I'll be willing to take a target somewhere over here. So this is going to be my target, and I'm going to mark it as pink, just so that you guys understand. Now where will be my entry depends on how the candlesticks form. So I cannot particularly show an entry right now, but it would be somewhere around this region. So if I mark this as blue, let's see what the risk to reward ratio is. Okay, if it's a good 1:2, then 1:2, yeah, we can take the trade. So yeah, it's a good 1:2 risk to reward ratio. So this is one setup that I'm looking forward to. You can keep this in your watch list too. The second stock is Cipla. Now Cipla again is in a very good demand zone. Let me draw the demand zone. Yeah. Okay, so this is Cipla. We are again at a very good demand zone. Now why is this a demand zone? Why is this a demand zone? You have to, I'm trying to explain you guys what I think, what I look at over here when I see the charts, fine, so that you guys get an idea of how to analyze charts too. So I see that the price has gone up. Okay, let me use this brush, make it thick and use black. Okay, so I see that the price has gone up, it came down, correct, and then it again came down, tested, went up. Look at where the big move is coming from. It is coming from this particular zone. This zone is where the demand is, correct? So right now Cipla is again in that important zone. So if I see another good up move, if I see some, you know, some kind of move coming like this, I'll be willing to buy here, and my target would be somewhere over here. So let me show you where I'll keep my target. Okay, so this is going to be my target if the price, you know, if it forms exactly how I want it to. Otherwise I'll be ignoring it. Fine. So if that happens, if the stock continues moving up, this is going to be my target. My entry would be somewhere over here. Fine. So I'll mark this as my entry, and my stop loss would be somewhere here below the zone. Now what is the reason for me to keep a stop loss below the zone? There is some logic to it. I'll explain the logic and all in the coming videos, but as of now I just want to show you guys what my thinking is. Fine. So this is what I'm looking forward to in Cipla. If this scenario plays out, then I'll be taking a trade. Otherwise I will sit out. I won't trade. My capital is more important. Protecting my capital is the first priority for me. So we have a good 1:2 risk to reward ratio over here. So this is one of the trades that I'm willing to take if the scenario plays out. Now what is the other thing that can happen here? Imagine if the price doesn't move up and it starts moving down. Will I take a trade? No, I won't take a trade. Will I take a short position? No, I won't take a short position either. You can take a short position, but I personally don't prefer taking short positions, on swing trading and all. So yeah, this is for Cipla. Now let's get into another stock, that is Dr. Reddy. Now, okay, I've already marked all of this over here. Let me remove this and draw it for you guys again. Yeah, let me just clear the diagrams. Yeah. Okay, so what I see in Dr. Reddy is, it is in a channel. Now, what is this channel? Let me use this trend line and draw this channel, so you guys can also see what I'm seeing over here. Okay, so you can see that the price has come down. It took support from this line. Again, it went up, it took support, came down, took support, came down, again took support. Now the price is again trying to go up. Now till where can it go? That is a question. We have to know when we need to exit the trade to, correct? What is the possible area where the price can take rejection? So from the previous data, what I can see is, this is the region, this is the area where the price has taken resistance, right? This is the trend line where the price has taken resistance. So my analysis over here again is, let me draw the demand zone, so that it's always very important to know where the demand zone is to understand which is the right price to buy. So you can see that this particular price has been respected quite a lot of times, correct? So this is the region that I'm willing to buy. You can see this was a resistance zone, price came down, took resistance, and now price took support from here. So this is a very good zone over here, and it's also there's a confluence between the support trend line and this demand zone. So it's a very strong zone, guys. Fine. Now my trade would be based on something like this. There is already a breakout, correct? Now what can happen in this particular stock? I know the video is a little long, but I hope you guys are learning something, correct? So what can happen in this stock? Now this particular stock, it can come down, okay? And over here it can take support and go up, or it can come down and break this support, or it can continue moving up like this, right? So there are three scenarios here. Now I am willing to buy this stock when? Depending where the market opens on Monday. If the market opens a huge gap up, I will be ignoring the trade because it wouldn't match my risk to reward ratio. Say for example, the market opens flat or somewhere over here. If I get a good reversal sign, I'll be willing to buy. So let's take, for example, this is going to be my entry. Okay, this is my entry. My stop loss will be below this demand zone. Yeah, so this is my demand zone. This is going to be my stop loss. And where is my target? It will be this particular high. Okay, this can be your conservative target. Now you can again use this resistance trend line as your target too. So this will be my conservative target. So I'm going to mark it in pink, and let's see what the risk to reward ratio is. I don't think it's 1:2, but anyway, let's see. Yeah, it's close to 1:2, 1:1.8. But if I take the resistance trend line as the target, then I get a good 1:2 risk to reward ratio. So these are the three trades, and this is what I'm looking forward to in the coming week. And if we get some good entries, I will actually record it, and I'll update it over here too. So that's it from my guys. That's it from my side, guys, and take care, and we'll see you in the next video. Bye bye.